If you have been trading the 4-hour charts, you likely suffer from a very specific and painful problem. You correctly identify the direction, you know the 4-hour candle is going to expand bullishly, but you try to enter and you get stopped out by a wick just before the move actually happens. Or you drop down to the 1-minute time frame, get chopped up by noise, and watch the expansion happen without you. The issue isn't your bias. The issue is that you are skipping a dimension. You are trying to jump from a macro time frame directly to a micro time frame without a bridge. Today I'm going to teach you the Fractal Bridge system. We are going to break down the exact DNA of a 4-hour candle, which is the 15-minute chart. Then I will give you the precise mechanical protocols for using the 1 hour and 30-minute time frames to confirm your bias, and only then, how to drop into the 5-minute or 3-minute charts for the kill. We will also cover SMT Divergence as the final filter to separate a trap from a true move. This is the mechanical blueprint. Let's begin. Before we talk about entries, we must understand the skeleton of the market. The most important fractal relationship in intraday trading is the relationship between the 4-hour candle and the 15-minute chart. You need to stop seeing the 4-hour candle as a solid block. A single 4-hour candle is actually 16 15-minute candles strung together. This is the fractal itself. When you see a 4-hour candle forming a wick, that isn't just a line on the screen. On the 15-minute chart, that wick is an entire downtrend. It is a series of lower lows and lower highs, moving into a key level. This is what we call protraction. When you are anticipating a 4-hour reversal, you are actually waiting for the 15-minute market structure to shift. The low of a bullish 4-hour candle is almost always formed by a 15-minute swing point. This means the 15-minute chart puts in a low, sweeps it, and then breaks structure to the upside. That 15-minute reversal is the bottom of the 4-hour wick. Understanding this fractal reality is the foundation of everything we do. However, understanding the 15-minute fractal isn't enough to trade it safely. The 15-minute chart can be noisy. It can fake you out. To trade this mechanically, we need a bridge. A bridge is a middle time frame that stabilizes your view. It connects the macro 4-hour direction to the micro entry. We strictly use 2 specific protocols. You cannot mix and match these randomly. You use the one that fits the current volatility and time of day. Protocol A is the standard bridge. This is where we use the 1-hour chart to bridge the gap to a 5-minute entry. Protocol B is the precision bridge. This is where we use the 30-minute chart to bridge the gap to a 3-minute entry. The rule is absolute. You are forbidden from touching the micro time frames, the 5-minute or 3-minute, until your bridge time frame has confirmed that the 4-hour wick is finished. Let's walk through exactly how to execute the standard bridge. This is best used when you have a clear 4-hour bias, but the market is moving with normal, steady volatility. Imagine the 4-hour candle opens and starts dropping. On the 4-hour chart, this is just a red candle, but you switch to your bridge, the 1-hour chart. On the 1-hour chart, you see a clear downtrend. Candle 1 closes red. Candle 2 opens and drops lower. You are waiting for the 1-hour swing point. This is the mechanical trigger. You want to see a 1-hour candle sweep the previous liquidity pool, the low, and then close back inside the range. That closure is the signal that the protraction is over. The 4-hour wick is theoretically finished. Once that 1-hour candle closes, the bridge is built. Now, and only now, You drop to the 5-minute chart. You are not looking for a reversal anymore. The reversal already happened on the 1 hour. You are looking for a 5-minute continuation. You want to see a 5-minute fair value gap or a standard order block entry to catch the body of the 4-hour expansion. Sometimes the 1-hour chart is too slow. If you are trading during a high volatility window, waiting for an hourly close might make you miss the entire move. This is where we use the precision bridge. The logic is identical, but the speed increases. The 4-hour opens and protracts. You drop to the 30-minute chart. You are watching for that 30-minute swing point, a candle that manipulates a low, and then closes bullish, respecting the structure. The moment that 30-minute candle closes, your bias is locked in. You immediately drop to the 3-minute chart. Why 3-minute? Because the 3-minute chart is the fractal heartbeat of the 30-minute. A 5-minute entry is too slow here. The risk to reward won't make sense. You look for a 3-minute F, VG, or order block, and you enter. This allows you to catch the 4-hour expansion right at the root. Now, even with these bridges, you can still get trapped. The market can print a fake reversal on the 1-hour chart and then continue dropping. To prevent this, we apply our final filter, SMT Divergence. SMT stands for Smart Money Tool, and it is a crack in the correlation between assets. Let's say you are watching your bridge for a bullish setup. You are watching ES and NQ on your bridge time frame, whether 1 hour or 30 minutes. You see ES make a lower low. It sweeps liquidity and looks bearish. But then you look at NQ. At the exact same time, NQ fails to make a lower low. It prints a higher low. This is SMT Divergence. This tells you that the selling pressure is weak. It reveals that the breakout to the downside on ES was a manipulation, a trap for retail traders. When you see this SMT form exactly as your bridge candle is closing, the probability of the trade skyrockets. It confirms that the protraction phase is over and the 4-hour expansion is about to begin. You always execute on the asset that showed the willingness to reverse, the one that failed to make the lower low. So, here is your daily workflow. Stop staring at the 4-hour candle and hoping it turns green. First, identify the 4-hour profile. Is it a time for expansion? Second, recognize the 15-minute fractal. Understand that the wick you are seeing is a 15-minute trend that needs to break. Third, choose your bridge. Are you using the 1 hour to set up a 5-minute entry or the 30-minute to set up a 3-minute entry? Fourth, wait for the bridge candle to close and confirm the swing. Fifth, validate with SMT. Is there a divergence between the assets? Let's look at one example for this workflow. This is a classic application of Protocol A using the 1-hour chart to bridge a 4-hour expansion. The date is August 29th on gold. Let's look at the macro context. It is 6 a.m. New York time. The new 4-hour candle has just opened. Looking at the profile, the previous London session, 2 a.m. to 6 a.m., was bearish but failed to expand. We are expecting the 6 a.m. candle to be our reversal into expansion candle. We want to catch the body of this candle moving up. Step 1. The protraction. From 6 a.m. to about 7 a.m., gold drops. On the 4-hour chart, this looks like a red wick forming. Most traders get scared here and sell. You do not. You know this is the protraction phase. The fractal is building the bottom wick. Step 2. The bridge. You switch to your 1-hour bridge. You are watching for a swing point. You see the 6 a.m. hourly candle close red. Then, The 7 a.m. hourly candle opens and drops further. This is a crucial moment. The 7 a.m. candle sweeps the low of the 6 a.m. candle, grabs the liquidity, and then closes bullish right back inside the range. This is your 1 hour C2 closure. The bridge is built. The 4-hour wick is mechanically finished. Step 3. The entry. You are not guessing. You wait for 8:30 to hit and wait for the continuation order block. 9 a.m. Opens, goes low, and then form a continuation order block. You enter on that block, keeping stop loss at the low and targeting to get that 2R. And what happens? We have our 2R. The price expands, forming that 4-hour body. I hope this finally clears up the doubt. Stop trying to guess what the 4-hour candle is going to do. Stop trying to catch a falling knife on the 1-minute chart. The market isn't random. It is a mechanical machine. If you respect the fractal bridge, you will stop getting trapped by the wicks and start catching the expansions. Go to your charts, back test it, and you will see the logic staring right back at you. Lock in your bridge, trade the mechanics, and I'll see you in the next one.